Imagine waking up one morning and finding out that a single algorithm, a string of mathematical equations written by a man most people had never heard of, had just made more money in one night than most countries earn in a year. Not a bank. Not an oil company. One man. One formula. Billions of dollars, appearing almost out of thin air. And the terrifying part? Nobody knew how he did it. Not Wall Street. Not the government. Not even the people who worked for him. This is not a story about luck. This is not a story about insider trading or corruption or bending the rules. This is something far more unsettling. This is the story of a man who looked at the financial markets, the most chaotic, unpredictable, emotionally driven system ever created by humanity, and saw something no one else could see. A pattern. A hidden signal buried beneath decades of noise. And when he found it, he didn't tell a soul. He just started printing money. His name was Jim Simons. And by the time the world figured out what he had built, it was already too late to stop him. What you're about to hear will change the way you think about money, mathematics, and what it truly means to be a genius. Because the secret he discovered wasn't just about stocks or markets. It was about the fundamental nature of reality itself. Stay with me. Because where this story goes, nobody expected. Before we go any further, I want to ask you something. And I want you to answer honestly in the comments below. If you discovered a formula, a real, working formula, that could predict the markets with almost perfect accuracy, what would you do with it? Would you share it with the world? Or would you keep it secret forever? Drop your answer below. I read every single one. And if you haven't already, hit subscribe and leave a like. It genuinely helps more people find stories like this one. Let's go back. Way back. To a cold morning in 1978, on the campus of Stony Brook University in New York. Jim Simons was 40 years old, and by every conventional measure, he had already won at life. He had a PhD in mathematics from Berkeley. He had cracked some of the most complex geometric problems in modern mathematics. He had worked as a codebreaker for the United States government during the Cold War. He was, by any definition, a brilliant man. But he was also restless. And broke. Well, not broke in the way most people mean it. He wasn't struggling to pay rent. But for a man of his intellect and ambition, the modest salary of a university mathematics professor felt like a cage. He had tasted something bigger. He had glimpsed, in the dark mirror of numbers and patterns, a world where his kind of thinking could be worth something extraordinary. So he did what everyone around him thought was insane. He quit. He walked away from tenure, from academic prestige, from a career that most mathematicians would have killed for. And he went to a small, unremarkable office in a strip mall in Setauket, Long Island, and he started a hedge fund. He called it Monometrics. Later, it would be renamed Renaissance Technologies. And eventually, it would become the most profitable investment firm in the history of human civilization. But in those early days, it was a disaster. Jim Simons was not a trained investor. He didn't know how to read an earnings report. He didn't have connections on Wall Street. He didn't understand the culture, the jargon, the rituals of finance. What he had were equations. And for the first few years, those equations weren't working. The fund lost money. Then it made some back. Then it lost more. The swings were violent and unpredictable. The model was broken, or maybe it just wasn't finished yet. And Jim Simons, who had broken Soviet codes and solved riddles that had stumped mathematicians for decades, sat in that strip mall office night after night, staring at columns of numbers, searching for something he could feel but not yet see. This is the part of the story no one talks about. The failure. The silence. The years of grinding, humiliating, grinding work before anything clicked. He started recruiting. But not from Wall Street. He wasn't interested in traders or analysts or MBAs. He wanted mathematicians, physicists, astronomers, computer scientists, people who had spent their lives studying systems, patterns, and hidden structures in data. People who had never bought a single stock in their lives. He hired a former speech recognition expert who had spent years teaching computers to understand human language. He hired a former cryptographer who had worked with classified government algorithms. He hired people who thought about markets the way a physicist thinks about subatomic particles, as systems governed by laws that are real, measurable, and predictable, even when they appear random. And slowly, a philosophy began to take shape inside Renaissance technologies. A philosophy so radical, so counterintuitive, that it bordered on heresy in the world of finance. The philosophy was this: human judgment is the problem, not the solution. The markets fail not because they are too complex for human intelligence to understand, but because human beings are too emotional, too biased, too irrational to trust themselves with the information they already have. The market doesn't need to be understood. It needs to be listened to. And to really listen, you have to remove every trace of human emotion from the process. That meant no hunches. No gut feelings. No reading the news and making a decision based on how a story made you feel. The algorithm would decide. Always. Every time. Without exception. And whatever the algorithm said, you did. Full stop. It sounds cold. Mechanical. Almost inhuman. But this was exactly the point. By the late 1980s, the Medallion Fund, the crown jewel of Renaissance technologies, open only to employees, was beginning to do something that no one on Wall Street could explain. It was winning. Not sometimes. Not in good years. It was winning consistently, year after year, through recessions and booms and crashes and recoveries, with a reliability that defied every accepted theory of financial markets. While the best hedge funds in the world considered a 20% annual return to be exceptional, Medallion was averaging closer to 66% before fees. After fees, it was still returning around 39% per year, every year, for decades. Let that number sink in. Warren Buffett, widely considered the greatest investor in human history, has averaged roughly 20% annual returns over his career. George Soros, the man who broke the Bank of England, rarely touched 30%. The Medallion Fund didn't just beat these legends. It demolished them. By a margin so large it seemed impossible. So impossible, in fact, that many people in the financial world simply refused to believe it was real. And here is where the story takes a turn that should send a chill down your spine. Nobody could figure out how they were doing it. Renaissance Technologies was famously, obsessively secretive. Employees signed non-disclosure agreements so comprehensive that they essentially forbade them from discussing anything about their work, ever, even after leaving the company. The algorithms were locked behind layers of encryption. The trading strategies were never published, never presented at conferences, never whispered to journalists. When asked about their methods, Simons and his colleagues smiled politely and said nothing useful. The financial world tried to reverse engineer the strategy. Academics studied Renaissance's publicly available data and came up empty. Rival firms hired former Renaissance employees, hoping to extract some fragment of the formula. They got nothing. The strategy was so deeply embedded in the system, so distributed across thousands of tiny, overlapping signals and microcorrections, that no single piece of it made sense in isolation. You could see the output, the staggering, relentless profits, but the mechanism itself was invisible. It was like watching a magician perform the same impossible trick, night after night, in front of a room full of the world's best magicians, and none of them could figure it out. What was Jim Simons seeing that no one else could see? Here is what we know, or at least what has been pieced together from years of investigative reporting, court documents, and the rare public statement from Simons himself. The Medallion Fund did not try to predict the future in the way most investors do. It didn't try to figure out whether Apple would beat its earnings estimate or whether oil prices would rise next quarter. Those kinds of predictions are the province of analysts and pundits, and they are wrong roughly as often as they are right. Medallion wasn't in that business. What Medallion did, what the algorithm was hunting for, were statistical anomalies. Tiny, persistent inefficiencies in the way prices moved. Patterns that repeated, not because they made logical sense, but because human behavior is predictable in very specific ways. People panic at the same moments. They celebrate at the same moments. They hesitate, they overreact, they follow each other off cliffs, in patterns that repeat across decades and across asset classes, embedded in the data like a fingerprint. The algorithm found those fingerprints. And it exploited them, thousands of times per day, in positions so small and so brief that no human being could have executed them manually. The fund wasn't making big bets on big ideas. It was making microscopic bets on microscopic patterns, over and over and over again, with such precision and speed that the profits accumulated like water filling a dam. Drop by drop. Until the dam was full. And then overflowing. This was the secret. Not a single formula. Not one magic equation written on a whiteboard. But a machine, a living, breathing, self-correcting machine built from mathematics and data and the systematic elimination of human error, that never slept, never panicked, and never stopped learning. And Jim Simons sat at the center of it. A man who wore rumpled clothes and smoked constantly and laughed easily and gave generously to mathematics education and scientific research. A man who, by the time he stepped back from running Renaissance in 2010, had accumulated a personal fortune of more than $20 billion. Not from managing other people's money in the way most fund managers do. But from his own fund. From the machine he had built and fed and protected for 30 years. There is a moment in 2003 that captures something essential about who Jim Simons was. He was giving a rare talk at a conference, and someone in the audience asked him directly, "What is the source of your edge? How do you consistently beat the market?" Simons paused. He smiled. And then he said, very quietly, "We have three things other people don't have. We have better data. We have better models. And we have better people." And then he stopped. No further explanation. No elaboration. Just that. Three things. And a smile that suggested there was a fourth thing he was not going to mention. That smile haunted Wall Street for years. What Jim Simons proved, what Renaissance technologies demonstrated beyond any reasonable doubt, is that the markets are not efficient in the way economists had long believed. The idea that all available information is instantly priced into every asset, leaving no room for anyone to consistently outperform? Medallion shattered that idea. Not once. Not twice. But for 30-plus consecutive years, through every kind of market condition imaginable. He proved that there is signal in the noise. That hidden within the chaos of human financial behavior are patterns, real, exploitable, repeating patterns, that can be found if you have the right tools, the right data, and most importantly, the right mind to build the machine that looks for them. he also proved something darker. Something that the financial establishment didn't want to acknowledge. He proved that most of what happens on Wall Street, the confident analysts, the charismatic fund managers, the elaborate macroeconomic theories, is theater. Dressed up noise. Expensive stories told to justify outcomes that are essentially random. The professionals who claimed to understand the markets weren't just wrong. They were confidently, expensively, systematically wrong. And one mathematician from Long Island had spent 3 decades proving it, silently, with billions of dollars in evidence. Jim Simons died on May 10, 2024, at the age of 86. He left behind a foundation that has donated billions to mathematics and science education. He left behind a firm that continues to operate, still secretive, still staggeringly profitable, still built on the foundation he laid in that strip mall office nearly 50 years ago. And he left behind a question that the financial world still cannot fully answer. Was what he built replicable? Could someone else, with enough data and enough intelligence and enough discipline, build another medallion? The honest answer is, we don't know. No one has done it. Not at that scale. Not with that consistency. Not even close. Maybe that's because the specific combination of factors that produced Medallion, the particular genius of Simons and his team, the historical moment, the specific inefficiencies they found before anyone else could find them, was unrepeatable. A unique convergence of mind and moment that happens once in a generation, or maybe once in a century. Or maybe, and this is the thought that keeps the quants awake at night, maybe it's because the real secret wasn't the formula at all. Maybe the real secret was the man. The person who had the audacity to believe that mathematics could conquer the most human of all systems. The patience to fail for years before succeeding. The discipline to trust the machine even when every human instinct screamed not to. The vision to see what no one else was willing to see. Jim Simons looked at the world of finance and said, "This is a problem. A mathematical problem. And I am going to solve it." And he did. Not overnight. Not in a flash of inspiration. But through decades of relentless, quiet, invisible work, the kind of work that leaves no footprints, makes no noise, and one day produces a result so extraordinary that the world looks at it and refuses to believe it's real. The money was real. The machine was real. The man was real. And the lesson he leaves behind is one that goes far beyond investing or mathematics or Wall Street. It is the lesson of what happens when one person refuses to accept that something is impossible. When they look at chaos and choose to see pattern. When they trust the process even when the process is failing. When they build, and rebuild, and keep building, long after everyone else has stopped watching. That is what Jim Simons did. That is what Renaissance Technologies was. And that is why, long after the markets have forgotten every analyst and pundit and guru who ever made a confident prediction on television, the name James Harris Simons will still mean something. Not as a trader. Not as a billionaire. But as proof, clear, mathematical, irrefutable proof, that the right mind, applied to the right problem, with enough patience and enough courage, can change everything. Even the rules of money itself.